This one is specifically for small business owners, so be sure to listen up. Listen up, small business owners, because I have a very special episode just for you. We're gonna go over lots of creative ways that you can find funding or financing for your business, or if you're trying to buy a house and you haven't been able to in the past due to, tax returns being too low, this is the video you're gonna wanna watch. So small business owners, we all know that it's a blessing and a curse to own your own business, right? There is moments of doubt, there is good days, there's bad days, all kinds of emotions going on. But don't worry, because I have the first cure for it, which is alcohol and cocktails. This one is kind of a play on a Sazerac. So a Sazerac is another whiskey-based cocktail, but we're gonna switch things up a little bit. We're gonna be using Irish whiskey and then apple brandy. I have some honey syrup. This syrup is actually infused with a little bit of saffron and honey. The fun part for this one is you don't put ice in the actual drink itself, and I'm a huge fan of like Manhattan, Sazeracs, anything that doesn't have an ice cube in it to water it down. That way I can just taste my drink. It never gets watered down or diluted, so that's why I'm a huge fan of these types of drinks. So the first thing you're gonna need is an ice cold glass. Typically with a Sazerac, you take absinthe, which is very high proof, it's very powerful. Absinthe is a hardcore like black licorice flavored spirit. You don't want to really use a lot of it in the cocktail, so for that reason I have it in this little spray guy. If you don't have it in a sprayer, you can put it in the glass, swizzle it around, and then just dump the excess in the sink. But this just gives us that flavor without overpowering the cocktail. So there we go. So that's how we started off. Ooh, it smells good. Then we are going to have the Teeling Irish whiskey. So this is where it's very different than a Sazerac. You don't use Irish whiskey in these types of cocktails. We're gonna use 1.5 ounces of it, and it's gonna go into the mixing glass. By the way, the name of this cocktail is going to be called the Copy and Paste. So, because we're kind of copying some of the Sazerac, but we're switching it around. Then we're gonna take our apple brandy. Again, doesn't really matter which brand, I don't even know, it's probably just the cheapest one, but it all works. You're gonna get 1/2 ounce of this apple brandy, throw it in with this. This is gonna be a super crisp, like refreshing cocktail, so perfect for, hot days. It's getting to be, fall weather here in Arizona, but it's still pretty freaking hot. So saffron infused honey syrup. Now honey syrup is really easy to make. It's basically just 1 part honey, 1 part water. You don't even need to boil it down, just need to heat it up, and then it forms this little honey syrup. And then all I did was add a few little saffron threads, because it's awesome and it gives it an extra little layer of depth in the overall flavor of the cocktail. This stuff's very potent though, so we only need 1/4 ounce of this. It's gonna give us just enough sweetness. And then we're gonna rock 2 different types of bitters with this one. The first one is the Peychaud's bitters, which has got this reddish color. We're gonna need 3 dashes of that. So we've got 1, 2, and 3. And then the classic Angostura bitters, we're just gonna use 1 dash of this, so 1 dash. Get some ice, mix it up, pour it in the glass. It's gonna be good. God, I need a new ice maker. And as I've mentioned in previous videos, or if this is your first time watching, the difference between a stirred cocktail and a shaken cocktail, stirred is not going to crush or break up the ice, so it doesn't dilute the spirits as much. Because again, I like to taste my alcohol when I'm drinking it. So this is just gonna get it nice and cold. You just spin that ice around within the stirring glass, spin it nice and fast, and that's gonna get it real cold without diluting it the same way a shaker would dilute it. So when you shake it, the ice crushes and it gets more water in the drink. And then we are just going to work our magic here. It's got a very different color than your standard like Sazerac. So copy and paste, kind of a play on a Sazerac. What's fun about this is when you first get your nose in here, you smell a lot of the absinthe, but you're not gonna get any of that flavor. I mean, you get a touch of it, but holy shit, that's good. Okay. Wow, that's good. That might be my new favorite drink. That's really good. Now that we've got our drink, let's talk some business. First, let me get into the mortgage side of things and ways you can use a mortgage to help better your business. If you are a small business owner and you own a home already, depending on when you bought the home, you're more than likely sitting on a good chunk of equity. If you were smart in the last few years and refinance when rates were low, you don't necessarily want to do another refinance to lose that lower rate and pull money out for capital to buy things for your business, whatever it might be. But we do have something called a home equity line of credit. A home equity line of credit is perfect for anybody that needs access to additional funds, especially for small business owners. Cash is king. It comes down to how much you can purchase, how much you can sell, whether you need inventory, but as a small business owner, cash is king. Well, this is a way to kind of tap into that cash. There's tax deductible options, which is nice. So since we're borrowing it against your home, it's actually a home loan. The interest that you pay on it is tax deductible. I know we're always looking for those write-offs, right? So this is a great way to utilize that and still have access to some capital. You typically can access up to a total of 90% of your total home value. So let's say we've got our house, right? We'll use the easy math, 100,000. There's not many homes that are right around 100,000 right now, $100,000. So obviously 90% of that means you could borrow up to $90,000. So let's say you have a mortgage of $30,000 on it. You would take the difference between that $90,000 and your existing mortgage. That's the line that we could do. So in this scenario, it would be a $60,000 line. The best part about this is money you can borrow and then pay back as needed. It typically will stay open for 20 years. Most home equity lines of credit are valid for 20 years to be able to borrow, which is great because that gives you options. If you need to purchase something and you don't want to use that cash sitting in your bank account because you might need that for payroll or for whatever else, use that from your equity line, and then when you do get the cash, you can just pay it right back and that equity line opens right back up. So let's just say it's a $100,000 line, you borrow $50,000, there's only $50,000 left. You pay back $25,000, now you've got $75,000 available to use. So a home equity line of credit is phenomenal for existing homeowners, small business owners, looking for additional ways to access capital. This is good. Small business owners who are not currently homeowners. First of all, why? Why have you not bought a house yet? And if your answer is, well, I don't make enough money on paper because I wrote off too much on my tax returns and I grossed $1 million in sales, but I wrote off $990,000 and only showed 10 grand in income for the year, that's okay. I have the perfect product for you. It is a bank statement loan. I've talked about these in the past, but they have really gotten a lot better with your options. So they typically have a little bit higher credit score requirements. If you're worried about credit, I can help with that too. The bank statement program is very plain and simple. We do not use your tax returns. We're not going to ask to see them. We don't look at them at all. We're just going to use your bank statements. Let's say you are a smaller business and you don't even have a business bank account. You have a personal bank account that you run your business through. That's fine. We can use a personal account all day. It could be personal, it could be business. We can use a 12-month average or a 24-month average. I always say use which one is going to have the largest average. So if you made a ton of money in 2020 and 2021 and then it's starting to slow down, 24-month average would be great. If you started off slow and then your business has really boomed in the last 12 months and you got a ton of deposits in the bank account, then the 12-month bank statement is going to be a great option for you. These loan programs are great because one, it allows you to purchase a home where typically you wouldn't be able to. Now the interest rates are a little bit higher on these ones, but honestly, they're not that bad. In most cases, they're anywhere between 1% to 2% higher than your standard loan. So again, as long as the payment fits in your budget, you got some options to help you get into that home without having to use your tax returns. You file your own taxes, right? You don't get a W-2, you make your own money, and you typically will file either a Schedule C or an S-Corp or an LLC, however you file. Most business owners think that when they're reporting their gross monthly income and then they take all their deductions, that we as lenders look at that gross monthly income. I hear it all the time. I have tons of people that are small business owners. They come to me and say, Braden, I'm looking to purchase a home. Can you help me get qualified? My business is booming right now. I made, $150,000 last year. It was a great year. I think now is a good time for me to buy. I'll be awesome. First of all, congrats on a great year. Now let's take a look at those tax returns. Let's fill out that loan application. And when I get that tax return, it does show $150,000 in gross sales. But after expenses, after everything, it whittles it down. And let's just say, for example, you show $20,000 after taxes. Well, unfortunately, W-2s we get to use the gross income to qualify people with. When you're self-employed, we use the net income. Kind of shitty, I know. But if you haven't filed your taxes yet, another thing that I do as a lender, this is an additional service that I do. Most other lenders aren't willing to, but it's because I understand it and I understand small business owners and I love what you guys are doing. There are some write-offs that I can add back on the loan side of things. So depending on what you're writing off, I may be able to add some of it back in. How do you know the difference between the good write-offs and the bad write-offs when it comes to a mortgage loan? Well, that's where a loan advisor like me comes into play. I'd be happy to review your situation. I can walk you through the good ones, the bad ones, the ones that we can't use, and the ones that really hurt. The biggest one, if you drive a lot for your business, always, always, always count the mileage. Mileage is an absolute add back. If you drive 30,000 miles a year with your business vehicle, and you write that off, and if you show that 30,000 miles, that is a smart expense that you can do as a business owner that we can add back into your total monthly income to help increase that bottom line. So you get to save on the tax benefits by not having to pay such a high tax bill, but you also get the added benefit of it helping for your mortgage loan to help you qualify for a larger dollar amount. Depreciation. Depreciation is one of the biggest ones that we can add back in. So if you've got something within your business like vehicles depreciate, equipment can depreciate, any sort of depreciation write-off is also an add back when it comes to a mortgage loan. That's money that we can put back in that total income calculation to help you show more money on paper and qualify for a larger loan amount. There are several other examples just like this. Every situation is unique. Instead of trying to figure it out on your own, just give me a call, email me your tax returns. I can take a look and show you, okay, good, bad, yes, no, this is the number we look at. This equals this. I can show you all of that stuff, so don't try to get too worked up about all the details because there are lots of options when it comes to your tax returns. If the tax returns are too low, if they don't work, we have alternative options for small business owners to help you get into that house, the house of your dreams. If I keep drinking, that'll help, right? Oh yeah, ideas are coming, yeah. We should call that liquid inspiration. Can we change the name of the cocktail? So, talking to small business owners that already own their existing property as a primary home, but now you're wanting to get into the rental business, and you probably barely qualified for that existing first mortgage on your primary home, right? So, how the hell are you going to qualify for an investment property when you're trying to expand your portfolio? I've got a whole other segment when it comes to investment properties and how to find unique ways to get started in investing, but specifically for small business owners, I want to talk to you about a few really cool ones. And I've talked about this in the past, is turn your existing home into a rental. If you don't have a history of being a landlord or renting your house out, and we don't have it on the tax returns, that's okay. If you've got a great monthly payment on your current primary home, and if you're okay with parting with it to move into another place for a little bit, it's a great way to turn your existing home into a rental. The rent, which is at an all-time high right now in the Phoenix metro area, you probably get a pretty penny for renting it out. And I guarantee it's going to be more than what your mortgage payment is. Whatever that rental amount is, we can use up to 75% of it as income to offset your existing payment up to the actual mortgage payment. So let's say you pay $1,500 a month, you're going to rent it out for $2,500. We take 75% of that $2,500 to offset that $1,500 payment. Well, now on paper, it's like that $1,500 payment doesn't exist. So you can go out and buy a new primary home, still do minimum down. You can even do an FHA loan if you own an existing home, 3.5% down. You can use down payment assistance as long as it's your primary home. I had another client that did exactly that. He rented out his existing property so that he could get a nice little piece of rental income, had a killer low monthly payment on it, used down payment assistance. Total out of pocket for this specific client was less than $1,000. If you could get into a rental property for less than $1,000, that's a pretty sweet deal right there. And then you can just keep going. You can do the same thing, like now live in your primary home for a few years, however many long you want, turn it into a rental, buy a new primary home. And you can just keep doing that. And then the best part is then we'll have a history of it and we can start using that rental income to help offset some of those expenses because you're writing too much off on your tax returns to help you qualify for a bigger and better house every single time. Option number 2, this is a great one. Did you know we offer loans specifically for investment properties that do not require any income documentation? Let me say that again. I'm gonna get real close here. I have a loan where you can purchase an investment property with zero income documentation. Now, I know what you're thinking, Braden, hold on. Isn't that what caused the crash, was these no-doc loans? You guys are just writing loans for anybody? There's a little bit more that goes into it. It needs 20% down. Gonna need a good chunk of change to get into that house. The particulars of this loan are, let's say we're gonna purchase a house for $300,000. You calculate what your monthly payment's gonna be based on the 20% down, current interest rates, all that good stuff. When we go to order the appraisal, as long as the average monthly rent for that style home in the area is going for more than what your mortgage payment is going to be, basically as long as we can prove that there's going to be positive cash flow on this loan, deal's approved. Plain and simple. So when we order this appraisal, which tells us the home value, these types of appraisals are also going to tell us what your average rent is for this property and in the going area. And again, as long as your mortgage payment is less than what the going rent is for, so let's say it's going to rent out for $3,000 a month, but your mortgage payment's only $2,200, that's an $800 a month cash flow. approved. There's more details on this as far as credit score. It does require at least a 20% down, but this is a phenomenal option if you don't have that income on paper. These types of loans, we don't even need to see it. We're not going to ask for a bank statement. Well, we need a bank statement for the down payment, but not for your income. And I don't need to see tax returns for the income either. Great option if you are looking to become an investor as a small business owner to help bring in a little bit of extra money while you're out there hustling every single day. I hope you found these tips helpful. I love small business owners. I'm a big believer in you guys. It's hard work out there, but you are the entrepreneurs that are driving this economy. They're doing the hard work that others, frankly, just don't want to do or are not willing to do. So cheers to my small business owners. Feel free to steal my cocktail, make your own variation of it. Let me know what your favorite drink is. I'd love to hear about it. That way I can make it on the next episode. Or if there's another topic or something you're interested in, or maybe something that you're just curious about, hit me up in the comments and I'd be happy to do another episode and share you everything that you can do and all the power and beauty of finance when it comes to being a small business owner and how you can leverage debt to help make you more income. Once again, this has been an episode of Mixology and Mortgages with the Hatchman. You guys have a great rest of the day. Cheers.